Good morning, guys. Hope you're having a great week. Hope everything is good. I know everyone's busy, so I want to bring you a little bit of what's going on in the market in case you haven't been watching, but it's getting a little crazy. So I'm gonna go ahead and just jump right into it. Um, so FTX, which is a big crypto coin and broker, it's basically about to collapse. They're asking investors to put up more money. Otherwise, they're going to have to file for bankruptcy. Why this comes to my attention, of course, yeah, this is too big effect to the crypto market and so forth. But I'm just curious because all of these crypto brokerages, miners, etc., have been basically going under. And I'm curious how that's gonna hit the banks because big banks have been investing in this stuff. Um, and big institutions have been putting money into this stuff. And not only money, but they've been buying it with leverage. As we can see, the interest rates have really hit the crypto market. Why? Because a lot of cryptos were purchased on using a lot of leverage or margin and so forth. And maybe we're starting to see margin calls occur, which is basically lenders asking for more collateral as the asset prices continue to decline. And if they continue to decline and the investors do not put up the money, the lenders can liquidate their positions and so forth. That is basically a margin call. So you can see here at FTX investors, the CEO of FTX advises investors they will go bankrupt without more cash infusion. So basically, they're asking for more cash. They were saying that Binance was gonna acquire FTX. That would have basically saved them. But I guess after going through their finances, balance sheets, fundamentals, and so forth, they backed out of the deal. So they probably saw something in there that they didn't like, and they decided to not go and move forward with the purchase of FTX. What I was kind of saying, I'm curious how this is going to hit the banks is because a lot of banks were invested or are invested in the crypto market, such as Morgan Stanley, Citi, and even the major institution BlackRock in this stuff, which I'm sure they have not been having a good time recently with all the price volatility in the crypto market, right? So here's an example. America's oldest bank becomes a hodler. Hodler is basically lingo for someone who buys and holds crypto, right? And Treasury, again, has been against this because, again, it isn't regulated. And Treasury basically issues guidances that they disagree with the crypto investments by banks because they're taking significant risk, right? All right, so let me see, BlackRock, the world's biggest asset manager, has teamed up with Coinbase to offer clients access to Bitcoin and other cryptocurrencies. JP Morgan Chase has invested in crypto companies, including blockchain intelligence company TRM Lab, despite CEO Jamie Dimon's public skepticism about crypto. Just last month, Damon dismissed crypto tokens as decentralized Ponzi schemes. There are serious risks from concentrated exposures to big banks and institutions, according to newly released report on crypto by the Financial Stability Oversight Council, part of the U.S. Department of Treasury. The crypto crash has wiped out $2 trillion in value in just a few months. The good news is U.S. banking system's exposure to crypto appears to be very limited, so the market collapse had a little impact on the overall financial system. So again, what I'm trying to say is I'm just curious how this is going to hit the banking sector, because they were investing in this stuff, and it hasn't been very regulated, which brings me to something that I've come across that actually happened in '08 due to lack of regulation, which this is in relations to the subprime mortgage crisis of 2008, which again began like in the 90s. So even the regulatory oversight of mortgage securitization was split among agencies. The Office of Federal Housing Enterprise Oversight regulated the government-sponsored companies that securitize mortgages, Fannie Mae and Freddie Mac, while the SEC oversaw the Wall Street investment banking firm that also created various securities backed by mortgages, known as private label securitization. Like an Indian folktale of a blind man and an elephant, each regulator was aware of only part of the problem, and some parts were not examined at all. Why that comes to my thought process or comparison is crypto is not regulated. I mean, that's the narrative, it's decentralized and so forth. But in being not regulated, there is no control on what institutions do with it or how they're taking risk with it. I mean, the subprime mortgage loan crisis that occurred in the housing bust was regulated. However, it was split between different agencies. So in a way, there was blind spots. So imagine what can occur with something that is not regulated at all. Is kind of crazy. On another note, because I've been watching the banks, because the crisis is not really panic until the banks get hit. When the banks get hit, that's when it is a full-blown crisis and bank runs occur and so forth. And then Federal Reserve has to step in, lower rates, and lend money to banks to keep them afloat. So I've been looking into Credit Suisse a lot. I mean, they basically, their stock price is embarrassing. It's like $3 or something. But one thing I'm noticing is Credit Suisse is spinning off an investment bank, First Boston. And usually when banks that are, in big trouble, what they do, such as Lehman Brothers did in the past, is they spin off an additional bank, kind of to chuck off all their bad debts and issues along with that spinoff, and hopefully, make their the parent company healthier, seem healthier, right? However, in the past that has not worked. But I find this kind of sketchy that Credit Suisse is kind of doing what has in the past been done to kind of just an excuse of a spinoff to spin off all your bad debts and issues onto another business, kind of remove the bad weight, if that makes any sense. So yeah, on a good note, however, inflation came in at 7.7% today, which is down from 8.2% last month. So kind of an interesting fact, because let me swap here. The markets rallied pretty hard today on that news. So here you got Coinbase, Binance, and FTX. FTX has completely just like, holy, I feel bad for the people that were in this thing, because this thing has freaking lost, I don't know, almost 97% of its value in such a short period of time. You could kind of see this big bar here. That's a huge sell order on the news, I guess, that they were, financially in trouble recently, right? So kind of crazy going on there. And then Bitcoin, right? Bitcoin's been selling off too. So the whole crypto market has basically been getting hammered recently. And I mean, I could have kind of saw this coming based off of, just interest rates going up, potential margin calls and so forth, because a lot of people were borrowing money to buy these volatile cryptocurrencies, right? And yeah, this thing is basically just in a free fall. I'm curious how low this would go. As for the future, I have no idea where this thing is heading. But as of now, it's basically on a free fall, except for the BS market rally of today, which somewhat less bad news is better than it's still good news apparently to the market sometimes, right? But as you can see here, you know, the Russell, that Nasdaq, the S&P are basically trending downward. I think this is another one of those BS rallies that are going to run out of steam at some point in the near future. So with that, I'll leave you with a quote. A lot of wisdom in this one. So John Maynard Keynes, who incidentally made most of his money speculating on commodities and currencies, compares speculating to a wager on the outcome of a beauty contest. You don't bet on the girl you find the prettiest, but on the one you think others would prefer. So kind of links in with this right now. Everyone's really there's a lot of fear in the crypto market right now. So I mean, I personally wouldn't touch this thing, but for speculators and so forth, this might create future opportunity buying at lower prices, right? However, I would not touch this thing while interest rates are going up. And based off of the selling that is going on in the crypto market, it seems to be, you know, recent purchasers or recent people that decided to get into the crypto market. So as per data and so forth, a lot of the older holders have not sold yet. So maybe if I see, you know, older long-term holders begin to liquidate, I might consider dabbling in this thing. But however, as of this time and interest rates going up, this thing is going to completely continue to get hammered. So yeah, hopefully you got some value out of that, and thank you for tuning in and listening to me. And I just hope you guys have a great rest of the week.